Give us a sense of why this price drop is significant, being the first one this year.
LITRE, I think that's definitely most welcome. Last month we had a 39 cents per litre increase, so I think overall inflation is coming down slightly, but if we look at the last figures, the largest or one of the largest contributors was transport, and obviously petrol makes up about 14% of that index, so obviously it will definitely have an impact on lower inflation going forward.
One other aspect of this is that the dealers' margins have also gone up. There have been some complaints that they were making almost a loss on their margins.
Well, according to the survey, it was about 6 cents that they were running a loss, and last month they had a 3-cent increase in the margin. This month again, so I think they're currently at break even, so there will be another dealer margin increase going forward to get them slightly into profit, but for now they're more or less at break even, so yeah.
Considering that fuel prices, at least global crude prices, have been dropping at least for the past few weeks, is it likely that even in the next price update, the fuel prices might go even lower?
Yeah, I think definitely there's still some scope given the average prices, and obviously that mostly depends on where the rand is going. So if the Brent crude oil price remains low, and we can we don't see a runaway rand, then yeah, there should still be some space, but more or less at the moment we're evenly balanced in terms of the cost and recovery.
Your analysis shows that this average is almost the same that it has been for the past 4 years, with the exception of last year's average prices. Explain that a little for us.
Well, unfortunately, I won't be able to give you the exact details. That's actually from our economist department. I think the general trend is, as I say, the average USD dollar per barrel and the rand cost price versus the actual price of the petrol over the 4-year cycle. And as I say, the cost versus recovery and the shortfall on the equalization fund.
Obviously, you mentioned, you already touched on this twice right now, how the rand performs vis-a-vis the dollar is very important. There have been thoughts to try and de-link at least the Namibian economy from the rand, and indeed many Southern African countries have this close correlation. And is it a concern?
Well, the Namibian dollar is pegged to the South African rand for a reason, and I don't think that there's any talks currently going on to de-link the Namibian dollar from the South African rand. I don't see that there will be any significant benefits for Namibia, considering that we import, as I believe, more than 80% of our goods from South Africa. So I don't think that there will be there's any reason for us to de-link.
The fuel price control is a controversial economic tool in many places, Kenya included, and places where it exists, it serves the consumers' benefits, but sometimes economists also rail against it for being against free market principles. I don't know what your thoughts on this are.
No, actually, I can't tell you if that is exactly the case on that. I think the fuel price is relatively in line, and if you compare the Namibian fuel price to that of South Africa, we are still lower, which is good because we're a vast country and we've got a lot of outlying posts in the country. So having a lower fuel price is most definitely in everybody's interest, and maybe out of that point of view, it's justified to have a controlled fuel price.
There are still concerns internationally about uncertainties around Iran, and these have been around for a while, but also significant increase in production in Saudi Arabia. What does the global picture look like for you?
Well, South Africa does import quite a substantial, or did import quite a substantial amount of their oil from Iran. I think, as you state, most of the shortfall has been picked up by Saudi Arabia. So I think the impact on that is relatively small. The oil market is anyway vast enough to pick up any excess or to pick up some excess supply if there's a demand shortfall from one specific supplier. I think looking forward anyway, the Iranian situation is sort of panning out better than expected, and there's less uncertainty surrounding the whole situation, which is also putting downward pressure on oil, and that's why we don't foresee that will have a major impact going forward.
Finally, do you think the impact of the lower fuel prices will be felt by consumers almost immediately, and because fuel has a direct impact on the cost of many other things in the economy?
Well, as I said, the transport sector, or the transport index, is around 17% of the Namibian inflation basket, and looking forward, you would obviously expect that a lower transport cost does translate into some lower prices for other products. So yeah, I think there's definitely maybe not a significant drop, but at least the outlook for future inflation pressure is slightly off now.
All right, many thanks, Ian Erlank, with us in Namibia from Capricon Asset Management.